Hey guys, welcome back to the Passive Money Podcast. My name is Alex. This is Kirby, and on this topic, we're going to be talking about the housing market crash and the stock market crash. But we're going to get into the housing market crash first. Or is it a crash? Interest rates are going up. Is it a price crash or is it selling crash? I've heard all kinds of things.
Is it a crash? Isn't it a crash? All right, first things first. This is how I look at it. If anybody that don't know, mortgage rates are at over 7%, and that's for owner occupied buyer, somebody that's looking to buy their first home, start a home, or move up in a home, things like that. 7% interest rates. For investors, it's probably 7.58% interest rate now. So I believe it'll have, well, it's not I believe. I know it will have an effect on the housing market. You will see transactions. You're gonna see less buyers come to the market, especially if they're using financing to buy a home. It's a couple factors in that. Of course, we're moving into the fourth quarter of 2022, which is already the fourth quarter is universally known as a slow period for real estate. Reason being, kids are already in school. Uh, People are already situated back to work. Summer vacation's already over with. People are already establishing their daily routine. So transition in the middle of a school year to go to another place is usually not optimal for individuals. So historically, the fourth quarter of a year is usually a slow month. Down add on the fact that it's already a historical slow month, and then now interest rates are double from January of 22 to October of 22. The interest rates has doubled. So that's a big a big portion. So your interest rate is literally doubled. If you look at the interest rate in January, which was at around 3.5 ish,
Mhm.
and
Yeah,
then now we're at 7. So interest rates double. So with interest rates doubling, that takes a lot of buyers out of the monthly payment cycle of how much they can afford on a month. So let's just with the premise that the interest rate has doubled since January to October. So let's choose a $250,000 home. We're just talking about principal and interest. On the 30-year fix at 3.5% interest rate, the mortgage payments will be $1,123. But if you transition from there, just a $250,000 home from there in January to now, where the interest rates, I'm seeing some say 7.5. So we'll use that 7.5. That same home for 250,000. Again, this is just principal and interest. This is not including property taxes, insurance, and HOA fees. That loan goes to $1,754. So people that could afford $1,100 or $1,200 a month back in January, that same house that they want, they will have to pay, 18, damn near $1,800 a month just because the interest rates rose over that time.
that's like a 50% increase in monthly payment.
Right. And then you start hearing about it in January. People, you know how you get the pre-approval loan is good for 90 days. People that was approved when the interest rate was at 4%, they couldn't get financially approved when it was at 5%. That's 6%. Interest rates affect a lot, and then they factoring in the debt to income ratios and things like that. So yes, the interest rates itself, the transactions of buying and selling homes will slow down drastically, and it will be more drastic. I'm not going to use 2020, 21 because we had historically low interest rates, but I believe that the home buying period from 2019 before COVID hit will be higher than what we have in 2022 because of those dynamics of the interest rate and seasonally adjusted because we're in a slower season.
And will it be housing prices? Because you say that housing prices won't, like the values won't be affected, but it'll be sellers that will lower their prices to make a sale. Is that correct? Or
It depends on everybody's individual situation. If you need to sell, then if they need to sell, then they will lower their prices too. So if they facing a foreclosure, short sales, or something like that, or they need to move ASAP or whatever, witness protection. I don't know what for whatever reason somebody might have to
what?
have to for whatever reason somebody might have to sell. they will lower their prices to sell. But people that don't need to sell and just want it to sell,
Right.
they more than likely will take their property off the market, or they will just let the time run out and see if they will get the bid that they're looking. And understand it's a third that needs to sell, a third that wants to sell and don't need to sell, and then it's a third that just lost their damn minds. It's still people right now they don't follow the stuff that we're talking about. They don't follow the interest rates and stuff like that. We're talking about sellers here who still believe that they can sell their house for the price that they can sell it back at the beginning of this year, back in 2021, back in 2020, after post COVID when it was just a housing friendly frenzy. It's people that still believe that they can sell their property for that value. And if you scroll through Zillow, Redfin, or any of these, you see that it's the people that need to sell, they're dropping the price, and then you still have that group out there that's just putting crazy astronomical prices on there. But you're starting to see more and more properties cut pricing, cut pricing, cut pricing. Because when I'm saying the value of the home did not drop, just because somebody lists a price of a house for 400,000, that don't mean that's what the house is worth.
Right.
That's just how much they want for the property.
Right.
It's up to you as a investor. It's up to you as somebody that's looking at the market to figure out what that value is worth to you. If the value to you is worth $400,000, then pay $400,000. But if the value to you, even if you're on occupancy and it's only 350 or 340, then don't go pay $400,000 just because you have FOMO. You just have to keep looking, keep looking, keep looking until you find the right one for you. So that value, that's what I mean by the value. So let's go with the same $250,000 home analogy. $250,000 is the list price. I don't care what Zillow say the price is, because Zillow already showed you back in 2020 that they don't know how to value a home at all. That's why they lost $1 billion trying to flip homes. But let's just say $250,000 is the value that I placed and I wanted to sell it for. And then let's say the house is only worth really like 100, but I'm going for 250. So if I drop the price, that don't mean the value of the house dropped. That just means the value of my expectations dropped as a seller. But people get that misconstrued, like, oh, the value of the houses are dropping because people are dropping prices. But they don't remember the starting price that they was asking for was astronomically higher than what the value of the area was in the first
Right.
place. So them dropping prices, that don't mean home values are dropping. That just mean people's expectation as a seller is dropping. But people get those
Right.
misconstrued what it is.
That makes a lot more sense when you put it like that. Yeah. Because I was what I was trying to do is like trying to understand how, because you hear where people are saying that housing prices are dropping, then you hear others saying it's just the volume of sales that are dropping. But then you actually see housing prices come down. So is it the sellers are just trying to get a sale? But when you put it like that, it makes a lot of sense when it's just sellers that were before selling way higher than what that home was actually valued. Home values have come up, but now they're bringing it down to the home value rather than above that home value. Yeah, that makes a lot of
And
sense.
if you remember that people was buying homes, $50,000 over asking price. Of course,
Yeah,
everybody know that
yeah,
people are listing their houses above what the house is worth already, and then you're going $50,000 over there. So is the house really worth 350, $400,000 in a house? No. But that's what people pay it. Some people gonna say, well, the price of it is what people pay for it. Well, they say the same thing back in '08 when people were paying $250,000. I have a duplex that somebody paid $280,000 to get built, and then it crashed during 2006, 2007. It still had cash flow, but the only thing he could sell it for was for $80,000. So is the value $80,000? No.
Did you
But
buy
the
it for
value,
80?
so excuse me.
Did you buy it for 80?
I wish I bought it for 80. Heck no, I bought it for 215. I bought it for 215, and now it's the value of the house. Value of the house.
Oh man. Okay,
And,
well,
and
it's still good.
the thing is, yeah, the thing is, of course, I can look at the transaction history. And
Yeah.
when I was buying the house from the guy, I was like, this guy made off like a bandit. Because you see, the house was built.
Yeah.
The guy paid 260, 270 to have it built. Housing market crash, it goes down to 80,000. This guy buys it and then he sell it for 215. But it was years later. But yeah, I bought it. But now that same property is worth
Okay.
like 400 and some change now. That's what it's worth. Not my wish pricing if I was selling, because I'm not trying to sell it, but that's what it's worth. It's about 425 now. But still, I think I've had it 3, 4 years. Not 4 years.
Okay.
Yeah, because I had it pre-COVID. So
Gotcha.
so yeah, 4 years or so. And yeah, so that's that's what it is. It's yeah, you're still laughing at the $80,000. Yeah. Oh man,
Oh man.
that dude got lucky. That dude got
Yeah.
lucky. But I can't be mad at him. I can't be mad at him. But I know he's kicking himself now, wishing like, oh, if I would have held on, I could have made 6, 7x times more money.
That's what
Now,
I
but
see.
I mean, but he still made a great profit. So I'm happy for him.
Yeah.
He left meat on the bone for me as a long-term cash flow investor. He left meat on the bone for me, which I appreciate. Rents go up over time, which I appreciate, and then the value of the property goes up over time, which I'll take that too. I mean, 100% return in 5 years, and it's over 100% return when you count equity, depreciation tax benefits, and the cash flow that I receive on a monthly basis. It's way over 100% return in 5 years, and that's just one property. I'll
Yeah.
take that all back.
And I hear and see a lot of like from people, they say like they just look at the house prices going up and they just say sell, and then there's regret years down the road when they see the house prices have even continued to go up even beyond the point at which they sold. And I mean, it's like, to me, the way I see it is, why would you ever sell real estate when you could just rent it, collect an income from it, and maintain the equity growth in that property? And if you need the capital from that home, you can pull out equity and use it to buy another investment. But a lot of people get locked into that sale because they just want the money right there and then.
I'm going to say this. Maybe I offend people. I don't care. You will always notice only people that's telling you to sell real estate is people that's broke. That's it. That's it. That's it. Only people that's gonna tell you to sell real estate is broke. Because they look at the lump sum mentality of like, oh, I can sell this and I can have 100. Let's just say you make $100,000 from it. I got $100,000 sitting right here. And then the thing is, like I said, always look around the corner. The only thing people can see is in this narrow box right in front of them. So now you got $100,000 sitting there. What you gonna do? Oh, I'll go buy a house. I'll go buy a car. Now you lost your cash flow. You buy depreciating assets. I'm gonna buy clothes. I can go on vacation. But you lost your cash flow, and now you lost $100,000. So how you gonna come up with the money again to do this again? Another way, so let's say you just needed $100,000. Let's say you got a house. I ain't gonna say you fully paid it off, but you got a house. You got $100,000 in equity, and you need $100,000. I'm not still saying take the $100,000 and buy your house to live in or buy your car. But if you refi and took the $100,000 out, and it still made mathematical sense as far as covering the debt obligation to that $100,000 and still cash flowing, and you went and bought another property called recycled capital, then that makes sense
Mhm.
to do that. But people only see is, oh, I can get this now and I can spend this now. But they don't think of, okay, so what do you do next? If you spend the money now, then what do you have after that? And then I guess they can go around, in their little clubs, boy, oh man, I flipped the house for $100,000. What did that do for you? Oh man, I'm proud now because I ain't got no more money to do anything else with.
Yeah.
So yeah,
I was talking to a guy
that's
who was in that same scenario where he was telling me he sold his house, made, I think it was 100,000 exactly, and then he rented an apartment, and he's like, yeah, I'm just waiting so I can buy another house and live in that one. And then since then, house prices have just gone up in Florida, and it's like, if his goal was to buy a house, then he would have to buy way above what he sold his for.
Right. And when I say buy a house, of course I mean rent a property. I'm not. I mean
Yeah,
him going into an apartment. That's fine. But to buy another house to live in, to because he think he found the cheat code. Oh, I
right.
can time this thing perfectly. Uh, maybe, but it would be a lot easier if he just went. He could stay in the same house he got, refi it out when the interest rates was low, mesh that together, and then so let's say interest rates stay at 7, 8 for the next year. Let's just say the next year. So from we had 22 October 22. So let's just say it goes all the way to 23. So that's 15 months. 15 months rent's about what 2,500 a month.
Yeah,
What's the rent over there? It's about 2,500 a month. So
yeah.
2,500 times 15 is what's that? I know you went to private school. What's that? So that's 36. So of his 100,000, 37,500 is already gone. And that's not including utilities. That's not including nothing. So his buying power is so, and of course, it's not like he's just sitting on the money and not doing nothing. He or she, I didn't hear what he said. But that's 37.5 already gone and you and you haven't made a play. And now I mean, it's too late. Hopefully, he got a game where he's willing to eat that 7%, 6, 7%, and find somebody that's lowering the value or lowering the price on their house. But if he try to get it at breakneck prices and pay that 7%, he's gonna be hurt because his mortgage is gonna be higher than his rent.